The digital asset report from the White House's working group on crypto came out yesterday. Rebecca, I want to start with you. What stood out for you? You know, when I briefly took at the report, it is 160 pages long. I found a lot of what was in there were things that we've heard before. Curious from your perspective, what stood out for you and if there was anything new that stood out.
This is really the first of its kind from the United States. And other countries have put out larger reports on crypto. The EU and a number of agencies or regulatory bodies related to the EU have put out these types of reports. And so maybe the first 40, 50 pages of this report just gives an overview of blockchain technology. That this is coming from the government, I think, is a way to try to make something that feels a bit esoteric or far away for what in crypto we call normies, but just people on the street, my mom, people's grandparents. It makes it easy to understand in some ways. There's a lot of great graphics. So they really do try to start with the building blocks of what the industry and what the technology really is. And you're right, there are certain parts of the report that look very familiar. So the section on stablecoins and payments very much harkens back to Genius, which we saw get signed into law last week, very historic. I think there's a very big section on tax, which, although it doesn't get as much airplay as the is it a security, is it a commodity question, it's actually extremely important. We have not had a lot of clarity on how normal transactions get taxed, how staking rewards get taxed, how these grantor trust structures where we put ETFs or ETPs and like the Bitcoin ETF or the staked ETH ETF, things like that, how those will get taxed. So I think that is really important. I think the biggest takeaway for me is the illicit finance section. It is extremely detailed and very critical to read. The part that is very interesting is that there is a deep dive on DeFi or decentralized finance. And they say a lot of what we've seen from other international regulators, which is DeFi cannot be regulated, even in the illicit finance context, the same way as traditional financial institutions or the same way that we typically do AML, CFT type regulation. But it also does make a pretty big recommendation that we need to start looking at whether there should be a separate or new type of what's called a financial institution. Those are the bodies that are subject to the Bank Secrecy Act, specifically for digital assets. And I think thinking about whether there needs to be a digital asset specific financial institution or multiple types would be a big sea change. A number of the large crypto institutions now, Coinbase and others, already are regulated as financial institutions, as money transmitters, but roping in a whole new group of financial institutions to be subject to the BSA will be a big deal.
Well, first of all, kudos to Rebecca for pointing me to that section of the report, which I was not focused on. I do have a question for Commissioner Goldsmith Romero, because one thing that I was looking for in that report was more clarity, pun intended, about what the role of the CFTC, your former agency, where you were a commissioner, would be. We have obviously the Clarity Act passed the House. We saw just our last episode, we saw the Senate Banking Committee release a discussion draft. Left a lot of questions unanswered. We still are waiting to hear from the Senate Agriculture Committee. What's your view on the role of the CFTC going forward in this space, in the digital asset space?
Yeah, I mean, I think the role's going to continue to be pretty large. I mean, one of the core recommendations in the report is that the CFTC and the SEC will sort of allow the trading of digital assets. But as your viewers know, the CFTC has been regulating the trading of digital assets going all the way back to 2018. So this is not new for the CFTC, much farther along than the SEC. And the recommendations in the report are really kind of getting into the nuances and complexities of that trading. A lot of it was stuff that we were dealing with. I did also note the illicit finance section. I think it's critical to see that being prioritized. And I know at the CFTC we were struggling with that. This idea of the application of the BSA and what constitutes a financial institution. I think in terms of Congress and where that's going forward, there is this regulatory gap. While the CFTC is regulating the trading of digital assets, it's in the derivatives side, sort of Bitcoin futures or Ether futures. And there is no regulator of Bitcoin and ETH and other spot crypto that are not securities. So there's this gap in regulation. that I've been a big proponent, as others have at the CFTC, of Congress filling, because people are trading in it and I'd rather it be regulated. So I think what we're looking to see right now is what happens with Senate Ag. Senate Agriculture put out the DCCPA, which was moving farther along, I think, than most people realize, and had a lot of bipartisan support. So I think with the bipartisan support that came from that, I think, I would expect whatever the Senate Ag markup is to sort of move more in the direction of the DCCPA, particularly with some of the registration requirements. And in the report, there's some recommendations for Congress on legislation, and some of those move more towards DCCPA.
Rebecca, I want to come back to you and touch on that tax section a little bit more. Can you just unpack what some of the recommendations were, especially when it comes to staking? You just mentioned that staking is definitely in the headlines as Ethereum becomes more popular on the back of these ETH treasury companies. Just talk to me a little bit more about what stood out for you from a tax perspective and what folks who are interacting with crypto should be paying attention to.
Great question. I will be perfectly honest and say tax was my worst grade in law school, but but this is really, really detailed. I think the most interesting piece of this, other than talking about getting guidance out from the IRS for the grantor's trust structures for ETFs to be able to have staking. So people have really been focused on the SEC has been holding back staking. I think it's pretty clear, both from the filed Solana ETFs and the new ETF requests for staking on ETH, that the SEC is most likely going to allow for staking. But what's also been holding it back is the lack of clarity from the IRS and how staking rewards will be taxed in this grantor trust structure. So there is something called priority legislation or priority guidance that is supposed to come out on that. I think the other piece of staking that is the other piece of the tax guidance that is very interesting is that they suggested that there be a new category of assets that encompasses digital assets to be able to figure out how taxation should go forward. And that is, people have talked about, oh, should we have a new regulator for digital assets? And obviously we're going to keep the SEC and the CFTC and split jurisdiction between them, as all the drafts of the legislation that we've seen has done. But having a new category of assets that the IRS has to figure out taxation for, I think is pretty innovative and definitely something we haven't seen before.